So welcome everyone. I'm your host Sumit Pahwa. I'm a corporate lawyer and company secretary. And incidentally, when I was thinking of my own introduction, I realized that today I complete 25 years of my career, having joined on 1st of July 1998 at GSK as a management trainee. And then I did CS, completed my CS law, MBA, etc. But I think if I were to consider 1st July and then 30th June, so today I complete exactly 25 years of my career. Yeah, thank you. Thanks for the congratulations. Yes, thank you. And yeah, while I was preparing Chandan's introduction, I just noticed this about myself. Okay, so I'm currently the partner at eMinds Legal, which is a leading corporate law firm in Gurgaon. And also I'm the co-founder and CEO of Complinity Technologies, which is India's leading compliance software. 1 minute about Complinity is that Complinity adds value to more than 1,000 plus companies, 10,000 plus users in 50 plus industries like Panasonic, Max Hospital, Roy Hotels, Toyota, Yes Bank, British Council, and many more. Complinity covers 2,000 plus laws and 25,000 plus compliances. In a sense, helping companies comply with the help of technology. It's a leading compliance software. So this is about me and Complinity very briefly. I have none to introduce me and Complinity, so therefore I did the job. But more importantly, happy to welcome the speakers, Chandan Narang. Now, Mr. Chandan Narang is a corporate lawyer and company secretary with 16 years of rich experience in corporate secretarial and regulatory compliances. Chandan has worked with organizations like Religare, PVR, and Make My Trip in the legal and compliance domains. Before joining eMinds Legal, currently Chandan is the associate partner at eMinds Legal, which, as I said, is a leading corporate law firm in Gurgaon with 45 professionals. And Chandan has been advising various corporates and startups on diverse matters like fundraise and investor agreements and buybacks, mergers, demergers, deposits, FDI, ODI, ECB, ESOPs, etc., etc. Secretarial audits, compliance audits. Chandan is also the co-author of a leading book called Corporate Law Referencer. I'm also a co-author, by the way. One of the finest books on company law and allied laws, and he's also served on the managing committee of ICSI Gurgaon chapter. Welcome, Chandan, to this forum.
Thank you, Sumit. Thanks for
also welcoming Sneha Adlakha. Sneha is a company secretary with 8 years of experience in corporate secretarial and regulatory compliances. Sneha is currently the principal associate at eMinds Legal and advising various MNCs and startups on various matters, board and shareholder management, equity and debt funding, private placements, preferential allotments, ECBs, ESOPs, stock appreciation rights, incorporations, due diligence, FEMA, etc., etc. So welcome, Sneha. This is Sneha's first webinar with eMinds as a speaker. So Sneha, all very excited to hear you today.
Thank you so much, Sumit.
Yeah, and let me also compliment both Chandan and Sneha. They are the technical wizards at eMinds. Highly technical and very, very good with managing their large teams that they manage. So I'm sure everyone will derive good value, should derive good value. Okay, and since I mentioned about Corporate Law Referencer, let me take a minute to showcase this new edition to you. This is the 9th edition of Corporate Law Referencer, just launched, updated till 10th of May. And yes, I think let me also put a link over here. Yeah, Corporate Law Referencer. So I'll share my screen for a moment. Allow me a moment. Chandan, can you see my screen?
Yeah, Sumit.
Yeah. So this is a Corporate Law Referencer. I've given this link to you in the chat box. It's a 9th edition, and this has sold over 10,000 copies in the last 7-8 years. And it's a great book. Annual editions come up every April or May. Section is the king. So everything is arranged section-wise. All the circulars, orders, rules, notifications, including all you see procedures, FAQs, resolutions, judicial precedents, everything is under the relevant section. Over 100 plus procedures, 700 plus FAQs on gray areas, 150 plus landmark judgments, 100 plus resolutions, secretarial standards, everything. It comes in 2 volumes, 21 quick reference tables as well. So one of the best-selling books on company law. And believe you me, the entire 45 people team at eMinds Legal, especially the corporate secretarial team, we run the entire practice based on this book. Why we wrote the book in the first place? Because we wanted to be updated and also train our teams. Our entire experience in solving client queries is the crux of it is mentioned in the FAQs 700 plus in this book. So go to the link. We've also, as a goodwill gesture for today, given a coupon code which can entitle you to a 30% discount by using this coupon code FLA webinar and a free shipping all over India. So, but the coupon code is valid only till midnight tonight. So just copy paste this link, and if you want, if you're interested, and otherwise also this is available on Amazon and all the leading bookstores all over it. So this is that's it from this side. I'll just stop share, and now coming to the topic of the day. Okay, FLA return is the topic of the day. Gray areas, practical issues. FLA return is the annual return, as you all know, annual return on foreign assets, liabilities and assets, which is required to be submitted by the entities which have received foreign direct investment and or made investment abroad, that is overseas investment in the previous year, including the current year. That is which hold foreign assets or liabilities in their balance sheets as on 31st of March. Now, applicable entities are required to submit the FLA return based on audited or unaudited accounts of the entity by 15 July every year. So we are on 30th of June. It's just 15 days left. Now you would say, what is new? This has been there for the last so many years. Earlier it was Excel. Some of the old hands would remember there was an Excel sheet earlier which used to be emailed to survey FLA at RBI, something like that. And now it has become a FLAIR portal. But what is new in this return? Well, nothing maybe. They keep doing little bit changes here and there every year. It's not a new concept. However, we still find internally, even at eMinds Legal, we train people. There are so many queries. Each client or each company has its own nuances of where to fit in. Is this participating share or is it non-participating share? Is this deposit or is this direct investment or is this portfolio investment? ECBs are covered or not covered? So several queries come up while filling up these returns by juniors, seniors, even experienced people. We make a note of all these queries, and this is what today the essence is. We'll give you overview, but we'll also deep dive into all the queries, share all our experience, especially Chandan and Sneha of filling hundreds of FLA returns of the clients that eMinds Legal has, and also answer a lot of your queries. So the governance around queries is that use the Q&A box. People have already started, there are already 2 questions received. So thank you, Gaurav and the anonymous attendee. You can please mention your name also. You don't need to be anonymous unless you're such a big brand and asking the query will you'll feel that, doesn't suit you. But anyway, that's on a lighter note. Yeah, we all are students at the end of the day as well. So use the Q&A box. I will try to ask the relevant queries to speakers in between, or we'll take it in the end. Do not use the chat box for queries. We'll use a chat box for something else. All right. So I think with this background, over to Sneha to start with. Sneha, for an overview of the FLA return.
Sure. Thank you so much, Sumit, for the introduction. And now moving ahead with annual return on foreign assets and liabilities. So we will first cover what is an FLA. FLA return is the annual return based on the foreign liabilities and assets, which is required to be submitted by entities receiving FDI in India or made FDI abroad. So there are 2 components which you have to consider while thinking whether the entity is required to file FLA return or not. First is whether company has received any foreign direct investment in India. And the second one is whether the entity has made any overseas direct investment outside India. So whenever these 2 points are to be considered, then FLA return gets hit.
Yeah, Sneha, if you can be slightly louder as well.
Yes,
or
sure.
Closer. Yeah.
So which entities are required to file FLA? So there are 3 broad categories under which FLA is required to be filed. First is companies who are covered under Companies Act 2013. They are required to file FLA return. The second one is limited liability partnership registered under LLP Act. The 3 other categories are partnership firms, public-private partnership firms, and SEBI-registered alternate investment funds. So these are the three broad categories for the entities which are required to file FLA return to RBI. But there are some entities which are not required to file FLA return, and they're very important to be considered. First is entities that have issued shares on non-repatriable basis to the non-resident Indians. Basically, those entities are not required to file FLA return, as the shares which are held on non-repatriable basis are domestic investments. And in FLA, we only file the FDI related investment or ODI. Since these are domestic investments, those entities, even having NRIs, are not required to file the FLA return. The next one is entities that have received share application money but have not made any allotment. So it is very important to understand this, because if the company has received the share application money as on 31st March, but the same has not been converted into shares, so those entities are not required to file FLA return on 31st March. Maybe next year, when those shares will be in the share capital of the company, then the FLA return will be required to be filed. The third and the most important is entities which have not received any outstanding balance of FDI or ODI at the end of financial year. So at the end of financial year, if you do not have any FDI or ODI standing in your books of accounts, then FLA return becomes inapplicable to your entity. Now we have listened what is FLA, who is required to be filed, and which entities are not required to be filed. Now we move towards what are the timelines for filing FLA. So by 15th July every year, the entity has to file FLA return on the basis of audited financials if the company has already done their audit. But if you have not done the audit, still you have to file the FLA return without any miss on the basis of internal assessment of your financial figures or on the basis of provisional financials. So the due date is 15 July, which is just 15 days from now. The next is filing revised return on the basis of audited accounts. So RBI has mentioned that the company, if there is any change in their figures provided, they can file revised return, though they have not mentioned what does change means, whether it is 10% change or 20%. So it might mean that even if there is a slight change, then you have to file the revised return. Previously, there was a due date mentioned as on end of September, but now that date has been removed. So it is always advisable to file it as soon as possible on the basis of audited accounts. Now, if you have not filed the return, what are the consequences? First, it will be a non-compliance under the provision of Foreign Exchange Management Act. And now the RBI has also introduced LSF, which was not previously there on the FLA returns. We have already been filing LSF fees for FCGPR filings and FCTRS, but RBI has now introduced it for the FLA also. So even 1 day delay will lead to a penalty of rupees 7,500 as late submission fees. So if you pay the late submission fees, then RBI will not ask you to go for compounding. But if the fees is not paid with and there is no exemption on this. So I would request everybody to take care of the last day to ensure the online filing. Now moving ahead, we have already covered what is FLA, who is to file it, who is not required to file it, and the consequences. Now moving ahead with what is the process for filing FLA. So
yeah, if I may interrupt you, just one question on the overview. That
yes.
As I said, you know, the FCGPR and FCTRS forms also are there. They have been there for so many years, and all the reporting of FDI, you know, whether through direct or through transfer of shares, happens through those forms. So why is this FLA required in the first place? You know, as a separate return.
Okay, so in FCGP and FCTRS, we only give details about the share capital which has been received from the foreign entities. But in FLA, we just does not capture only the assets, basically the share capital, but we also capture the liabilities of not only our shareholders, but also other foreign and unforeign related parties also. So RBI conducts different surveys which are required as per the International Monetary Fund, in which they capture what is the financial status of a company. So RBI gives them the information about the outstanding foreign assets and foreign liabilities. And on the basis of that, International Monetary Fund gathers the information about balance of payment and international investment footing of India as compared to other countries. And that is why this FLA came in picture.
Yeah, that's quite useful. Thank you. Yeah.
Thank you.
So to just to add on to that, what Sneha has mentioned. So earlier, there was no penalty with respect to non-filing or delayed filing. RBI used to simply, ask people to file, ask companies to file that. However, understanding the importance of these surveys and knowing the balance of payments, etc., now they have covered this under the penal provisions also.
All right. Yes, Sneha, proceed.
Okay. So now moving ahead, what is the process for filing FLA? The first and foremost process is registering on the FLA portal. So you have to go on the FLA portal website and you have to fill requisite informations like the company's details, authorized person details, and then you have to insert those details and submit the form. And once you submit the form, the registration is done. Then you have to move ahead with filling the requisite information in the relevant 4 sections in the online form. And the last but the foremost important point is submitting the form and saving the acknowledgement. So when you're registering on the FLA portal, there are some things which can be easily seen from your eyes are the details like name of the company, address, authorized person contacts, and email ID details, which you have to enter. But there are a few points which you have to consider while filling those details. First is the authority letter and the verification letter. The format of the same is available on the FLA portal. You have to ensure that the format is same. Even one single change in that will lead to rejection. So you have to be very careful about that. The authority letter is to be, both the documents are to be printed on the letterhead of the company and to be signed by the person along with affixing the stamp of the company. Previously during COVID, RBI allowed us to file this letter with digital signature and even an unsigned letter was allowed. But now they have strictly said that the letter has to be physically signed only. We have seen cases where digital signature letter was also rejected. So try getting it physically signed only. The second is attaching the PAN card of the authorized person with this authority letter. Third step is to ensuring that the password reset, which is sent to the authorized person, is reset within 24 hours. So it is very important that you call the authorized person before registering it, that an email will be received by him or her, because you will get only 24 hours to change the password. And if you miss it, then that password will get expired, and then you have to mail it to the RBI requesting them to regenerate the password, which will of course increase the timeline. So it is always better to inform the authorized person well in advance. And this authorized person will be the person who will be receiving the OTP at every time of login. So this is very cumbersome process because every time you have to call the authorized person that an OTP has been sent to you and you have to provide them. So that person should be approachable. Otherwise, you will just keep sitting for getting the passwords. Now moving ahead, cases where request to RBI is to be made. So there are various cases where we have to request the RBI. Like in case our password gets expired or we are unable to retrieve a password. So we can mail to the RBI, giving them the name of the company, SIN, and username. Even if you do not have the username, do not worry. You can just send them your email ID, the SIN, and the company number, and they will help you with retrieving the username. But when you enter the username, the password will go to the authorized person only. So when there is a change in the management, do ensure that before the previous authorized person leave the entity, you get this change. Otherwise, it will be very difficult to contact that old authorized person for getting the password. The second is in terms of revision and return. There are chances where we have to revise the return. For example, if we have filled the provisional financials and now we have to move ahead with filling the return on the basis of audited financials, then we have to submit a request to the RBI. We have to simply log in And on the portal only, you will see the option of requesting for revised return. You can submit that, and then a mail will be received by the RBI that now you can revise your return. The third is for alternate investment FLA return. So alternate investment registered under SEBI are also required to file this return, as I explained in my previous slides. But for them, the system has still not given an online form. So for that, you first have to register, even though the form is not to be filed online, but registration is compulsory for alternate investment fund also. So you have to register it on FLA portal, and then while giving your registration details, you can send a mail to RBI on the web email ID provided on the slide, which is survey@rbi.org.in. You can give them your registration details, and then you can ask them to provide you an Excel. In that Excel, you have to fill the information about your FLA and send the mail to the department, and then they'll send you an acknowledgement of receiving this return. The last but not the least is deactivation. So there are various cases where the RBI does not allow you to change the details like that. You have to first deactivate, and then only you can fill the details. And the cases are in case the company's name is changed, in case the address, for example, you have changed the registered office address, the authorized person details get changed, or due to change in name or the address, the SIN gets changed, LLPIN and UIN changed. So in all those cases, you have to first apply to the RBI to deactivate, and then once your request is submitted and they approve it, then they'll send you a mail that you can now apply for new user registration. And when you apply for new user registration, all your previously data will come in your new user. Nothing will get lost, so you don't have to worry about that. So all the information gets transferred from your old user ID to your new user ID, and then you can start filling the return. Now, moving ahead with few sections. So there are various sections on which FLA is divided. First is section 1, which is basic details. Section 2, financial details. Section 3, which is foreign liabilities. Section 4, which is foreign assets. And the last is the variation report. So we'll make you go through each and every section to make you understand that how the section-wise details are to be entered and the broad things which are to be considered while filling this return. First is section 1, which is the basic details of the company. So in this portal, you have to mention few basic details like name of the company, PAN, SIN, details of contact person, including his name, email ID, mobile number, etc. So you remember I informed you about the authorized person details. So previously what used to happen was when we used to enter the authorized person details, that details used to capture in contact person details automatically. But now this is not so. Contact person at the time of first time registration, contact person details come as blank only. You can insert the details of the person and then you can move ahead. Now the contact person and authorized person can be same or different. Next is account closing date. So for example, if your company has account closing date as March, you can enter March or December or
I think looks like a problem with Sneha's net. Chandan, you're there, right?
For 31st March
Yes.
data.
Oh, Sneha, we lost you for a
Yeah, we
moment.
lost you.
Can you repeat the last 15 seconds?
Okay, so I was discussing about account closing date. So in account closing date, even if the company has different financial year, but still FLA is required to be submitted on the basis of 31st March data only. So for example, if a company has financial year closing as December, they can insert the details as December, but information will go as per March only. So in those company cases, the reason for submitting the revised return on the basis of audited figures does not come into picture only, because the data will always be on the basis of provisionals only. Basically, some figures till 31st March, and from January to March, you have to insert details on the basis of provisional data only. Next is nature of business as per NIC code. So the system allows you to select only one NIC code as per the drop-down list available. So even if the company has two activities in which they are dealing, for example, some companies have manufacturing as well as trading both. So in those cases, you have to enter details and you have to select the NIC code for the entity, for the activity in which the company is earning major revenue. So for example, if you're earning 60% from manufacturing and 40% from trading, then go ahead with mentioning details about the manufacturing. So that NIC code will be entered. Next is whether companies merge or amalgamated during the year. For example, if some entities get merged into your entity, then of course, even RBI wants to understand why is there so much variation in the amount mentioned previously and this year. So that is why they ask whether the company is merged or amalgamated. Then whether the company is listed or unlisted, type of company like associates, it is associate, subsidiary, asset management company, whether any foreign technical collaboration. If company has entered into any foreign technical collaboration with a foreign entity, then it is to be mentioned, because then there will be a royalty fees and technical know-how fees, which will be captured in your financials. There are two things which I want to explain. First is any business activity during the reporting period. So previously what used to happen was, if you enter no here, then the system does not require you to file the sales and purchase details. But now with this new portal, it asks you to insert the sales and purchase details also, even if there is no activity during the reporting period. So maybe you have not earned a revenue, but in the purchases item, you have to insert the expenses, which Chandan will explain you in section 2. So last, but one of the most important point is class of shares and face value. So there are 3 classes to be defined here: equity, participating preference shares, and non-participating preference shares. So there are 2 columns. First, you have to mention how many classes and then the face value. So if you have 1 class, you can simply mention 1 and insert the face value as 10 or 100 as the case may be. But if you have more than 1 class of shares, maybe 2 or 3, then you have to enter 2 or 3 over there. But the system will not allow you to enter the face value, because FLA portal does not allow you to enter face value as 10, 100, which ROC forms allow us to. So here you have to just mention the class of shares and not the face value. And you can directly mention the value in section 2, where we have to mention the non-resident shareholding in lakhs. So you have to carefully see what is your class of shares and face of value and then enter it. Now I would stop for 5 minutes and ask if any of my panelists have any concern or queries in this, and then we'll move to the other sections.
Yeah, so Sneha, while you're panelist, as your fellow panelist, I don't have any query. You've beautifully explained, but I think the audience has a lot of queries. I already see 30 plus questions having poured in. Somebody was asking, Parveen was asking about the account closing date. Can you just repeat the account closing date once?
Okay, so account closing date is basically date on which financials are getting closed. So if you have 31st December as account closing date, you can insert 31st December as account closing date. But the data you will fill will be on the basis of 31st March only. It will help RBI to understand that why your data is different, because you will not be able to ever provide them the audited figures. So account closing date is the date on which books of accounts are getting closed, but data will still be required as on 31st March.
Understand. Also, I think in the in the interest of time, there are, as I said, multiple questions pouring in. So we see and thank you audience for your genuine interest. Now, I'll tell you, as I said in the beginning, there are 2 kinds of audience. One who's putting the question in the Q&A box, which is what I said you should be doing. The other who's putting it in the chat box. Okay, while you're putting it in the chat box, I'll be picking up the questions for the speakers to answer first from the Q&A box, and then time permitting from the chat box. So you decide what priority you want to give to your questions. If you want your questions to be prioritized, put it in the Q&A box. Now you don't need to now copy paste and again put it in the Q&A, but all the new questions, only put it in the Q&A box and not in the chat box. That's how I'll be prioritizing. Okay, let us do one small to break the monotony. Let us just do one small poll. Have you filed or reviewed FLA returns on FLAIR portal?
Welcome to Complinity Technologies. Complinity is India's leading governance, risk and compliance software helping companies to to manage their compliance, contracts, litigation, legal updates, inter-financial controls and more. Complinity is a one-stop shop for all GRC needs. With our proprietary 12 GRC modules and real-time legal updates on 2,000 plus laws and 24,000 plus compliances, all in an integrated platform that is easy to use with automated alerts and risk management capabilities, is why compliance managers, general counsels and chief financial officers choose Complinity every time. Join the most innovative and prestigious brands that use Complinity. Automating your compliance management. Request a demo at complinity.com.
So this is for the speakers to get an audience mix as to how many of you have already either filed or reviewed, and the others. Okay, and also in the chat box, if you could just give your responses. Are you here for knowledge enhancement, or are you here for to know basics about FLA, or are you here to get your queries answered? So just open free-flowing chat if you can put it in the chat box. Knowledge enhancement, to know more about FLA, or get your queries answered, or anything else. Yeah, this will give a flavor of the audience as to why the audience is here, and thank you for turning in big numbers today. So knowledge enhancement, basics, to know more. Okay. And if you already come with your queries, getting your queries answered, you can also say so. Right. All three. Okay. I think we have a fair mix of all three, but knowledge enhancement is ruling the show. Anyways, this is good. Thank you, audience. And I think over to Chandan. Chandan, you can also see we have now multiple queries already flown in. Time is short. So if you could take 20-25 minutes to wrap up start and wrap up. You haven't even started and I'm saying wrap up. So start and wrap up your section 2, section 3, section 4, so that the last half an hour we can focus dedicatedly on answering the audience's queries, which are the true gray areas or practical issues. And of course, when you cover your 2, 3, and 4 sections, please share your experiences of the gray areas and other things that you've noticed, Chandan. So over to you, Chandan.
Yeah, surely. Thank you, Sumit. And thank you, Sneha, for very meticulously explaining till section 1, how to register, where to register, and all these things. I think things have been amply clear, must have been clear to the audience up until now. So now I'll take you through section 2. Sneha, you can stop share your screen. I'll
Sure.
take it from my.
Also, since this 30-second break while Chandan is starting, a couple of you have asked whether this PPT will be shared or not. So, as you know, this PPT is not the entire presentation. What the speaker is saying behind the PPT, along with the PPT, is the presentation. So, the entire recording of this webinar stroke podcast will be available on YouTube. The podcast on the audio only mode will be available on Spotify. We'll share the links in some time again. And so then you can view this recording at your convenience. There was a little bit some doubt, I think, on the discount which I mentioned at the beginning of the webinar. So not to disturb the flow, but very quickly, the book is for 3850 rupees. It's already available at 20% discount on that link, corporate law referencer. For today, additionally, the coupon code that I've given you in the chat, additional 10% discount is being offered, so totaling to 30%. So the book 3850 is now available today till midnight for 2695, which is 30% discount plus free shipping all over India. Hope that clarifies. Yeah, and how to get the recordings? Just subscribe to the. I will share all the links in the chat box while Chandan is saying. You can subscribe to YouTube channels, etc., and you will be notified of when we upload the webinar on the YouTube. Over to you, Chandan.
Sure, thank you. So let's now analyze how to fill in information and what all information is required to be filled in section 2 onwards, which is the more technical part. So section 2 specifically talks about the financial details of the company, the general financial details like paid up capital, your P&L, your reserves, your sales and purchase, etc. So the paid up share capital is divided into 3 categories: equity share capital, participating preference shares, and non-participating preference shares. So participating and non-participating both are the types of preference shares, but there is a reason why these are segregated here. So to give a distinction between participating and non-participating preference shares, so participating are generally those preference shares which have rights into the surplus dividend or the surplus profit, residual profit after equity has their own share, or both of them. So which means they participate in the surplus profits and surplus reserves. So those are the participating preference shares. Non-participating preference shares do not have either of these rights, any of these rights. So they are categorized differently. So we'll understand more once we move ahead. Then once we mention about the paid up share capital, so like Sneha mentioned in the class of shares discussion also, that if there is only one class, system allows you to enter the face value, but if there are more than one classes, face value is not entered. So if it is only one class, we enter in the face value, we enter the number of shares, it automatically calculates your paid up capital. But where there are more than one classes, after entering the number of shares, we can put in the total paid up capital manually also. Then details about non-resident shareholding. Here we have to give that portion of the shareholding which is held by the non-residents, category wise, like non-resident individuals, body corporates, other associations, etc. Third is the profit and loss account. So here we have to mention about profit and loss from the PL, before tax, after tax, dividend if any declared by the company, interim as well as final, and tax on dividend if any. So nowadays generally there is no tax deducted by the company. Earlier it was dividend distribution tax which was deducted in the hands of the company. So this is not much relevant as of now, but still it is covered in case there is still any tax applicable. Next is the reserves and surplus. I think we've been queries on the reserves and surplus also. So reserves and surplus here means majorly cash reserves. In case there are any reserves which are not cash reserves, for example, revaluation reserves, we have to exclude those. And the P&L balance. So this reserves and surplus will include the P&L balance also, but we need to mention P&L balance separately, from the reserves also. Like it says, profit and loss account balance out of the reserves and surplus. So this does not mean that we'll consider reserves and surplus excluding profit and loss. We'll have to consider profit and loss also while we mention reserves and surplus figures. So system will auto calculate your net worth, so which will be your paid up capital plus reserves and surplus. Right. And then it asks about sales and purchase details. So sales mean the entire revenue which is coming up in your profit and loss will be considered as sales. This may include other income also, your revenue from operations plus your other income, and divided into domestic as well as export. Similarly, purchase figure. So purchase also we have to consider from the profit and loss accounts. Total expenses mentioned in your profit and loss account, excluding depreciation, will be considered as domestic purchase, which means the cash expenses. Then imports, if any, will be mentioned separately. Now, very important point here is that while we talk about sale and purchase from the profit and loss account, we also need to include capital purchases, if any. So, for example, if we've purchased any, anything on the capex side, like say building machinery, for example, so that has to be considered here while we mention the figure of domestic purchase or imports. So, in both the cases, even if it is domestic purchase, the number of employees on payroll also needs to be mentioned. While this is not very related to the foreign liabilities and assets, but this information is also asked here. Perhaps RBI wants to know how the employee scale in the company, FDA funded companies basically. So section 2 now covers the financial details. Coming to section 3 now, which talks about foreign liabilities. From here, we'll talk about the non-resident, part. What is the liabilities to the non-residents is covered in the section 3. So under this section, there are four categories, basically 4 points. One is we need to put in information about any capital or any liabilities towards non-resident shareholders having 10% or more equity holding. Second is in case there are investors which are having less than 10% equity holding, therein we need to provide information on the country-wise basis. Third is the portfolio investment, and fourth is the other outstanding liabilities. So when we have to fill in information, we need to first analyze how many direct investors have 10% or more holding. It asks for the number of direct investors because it will automatically open those many tabs. So number of direct investors holding 10% or more equity, and month and year of receiving FDI first time in your company. So it may be possible that, okay, 2017 or 2018, you had FDI, and then your non-resident shareholder transferred your shareholding, and for the next 3-4 years, there was no FDI. Now, again, you have FDI in your company by way of transfers or by way of fresh allotment, but you'll have to enter your first time you received your FDI, because RBI will then link your data accordingly that this company had FDI earlier also. Here we have to mention investor-wise details I mentioned. So name of the investor, country of investor, now the shareholding part, etc. In case, as I mentioned, in case there are less than 10% equity holding, so number of countries, how many countries we have these investors, we need to mention that number, and it will open tabs as per the number of countries we enter. Then the country-wise consolidated information. So what information is required to be mentioned in both the above scenarios? First is the equity and participating preference shares. So you'll realize I mentioned in my previous slide that participating and non-participating preference shares have been categorized differently for a particular reason. See, participating preference shares are treated at par with equity because they also have a right in the surplus profits or surplus dividend. Non-participating preference shares are treated differently. They are treated as other capital, or they are treated as quasi debt. So they are not considered in the equity and participating preference shares. For example, the terms of your preference shares does not mention whether these are participating or non-participating. So generally, if the terms does not mention anything, so we consider those as non-participating, because preference shares per se do not have any right in the surplus profits. Only if your terms prescribe that they have a right either to dividend or to surplus profits or surplus reserves, or both, then only you have to consider those as participating preference shares. So then the second part is other capital. In other capital, we have to mention if there are any liabilities to the direct investors. So this may be in the form of non-participating preference shares, borrowing and lending, for example, ECB, or any loan received, any debt securities, NCDs, for example, issued, or CCDs you issued, any trade credits, financial leasing, share application money, which Sneha talked about. If there is a share application money, companies are not required to file FLA. Just to clarify a bit more on that, in case you already have FDI as of 31st March, then you need to fill in this FLA. And if you have received share application money, say on 15th of March, and you have allotted shares in April or May within the 60 days time period, the share application money amount will come under other capital. It will not come under equity share capital. And if you have received the FDI first time in your company, again, say on 15th March, and you have not allotted share capital, so you do not have FDI. So you don't need to file FLA on that basis. Right. Third is the information required to be mentioned about if there are any disinvestments made during the year. So disinvestments means your non-resident shareholder have sold the shares during the year. It may be by way of transfer, you filed FCTRS, etc. Or there was a buyback in the company. A company has purchased the shares, so that is also considered disinvestments. So one may refer to the ODI regulations also, where disinvestments is more clearly defined. So in case there is any disinvestment, that figure needs to be mentioned here. So to reiterate, in case investors are having 10% or more equity holding, all these informations are to be mentioned on the basis of each investor. And in case of less than 10% shareholding, then these have to be mentioned on the basis of country-wise consolidated information. Third is the portfolio investments. So portfolio investments is generally in case of listed companies, like less than 10% non-resident holding is considered as portfolio, unless if any company specifically even less than 10% shareholding is held under FDI scheme. So there is no restriction that listed company cannot have FDI. Can have 1%, 2%, any number less than 10% also. But if it is under portfolio scheme, say purchased in the secondary market, then it will come under portfolio investment. So in case a company has a portfolio investment as well as FDI, so we need to mention the percentage of equity and participating preference share capital holding under FDI also, and then equity securities at market value. In case of unlisted companies, as I mentioned, the net worth is calculated and non-resident shareholding is calculated, amount is calculated automatically by the system. Let's say your net worth is, let's say, 1 CR, and your non-resident shareholders is holding, let's say, 15%. So 15 lakh will auto calculate in the figure. Here, in case of portfolio, there is no concept of net worth. It is at market value. Listed companies have market value on a daily basis. So these securities are to be mentioned as at 31st March market value. Then debt securities. If the company has issued any money market instruments, bonds, and other instruments of maturity of more than 1 year, non-participating preference shares and debentures held by foreign investors who does not have any equity participation. In case the investor has an equity participation, it will be covered in point number 1 or point number 2, more than 10% or less than 10%. But if there is no equity participation, means no equity or participating preference share, this may be case of CCPS or CCDs also. One might think CCPS is capital, why not cover in the capital part? But if your CCPS are non-participating, then you have to mention this investment in the debt securities under as a non-participating preference shares. So this is a very confusing point, but I just wanted to clarify on that part.
Maybe Chandan, for the benefit of audience, if you could again clarify what is participating and what is non-participating instrument.
Sure, Sumit. So participating is where the preference shares have the right either in the surplus dividend after the dividend is distributed to the equity shareholders. So there might be a surplus dividend or surplus profits or surplus reserves. If the preference shareholders have right in either of these, so then those become participating preference shares, which means they have a right in the overall net worth of the company. But if there are no such rights, those are considered as non-participating preference shares, even though that is considered as a share capital. But those are non-participating preference shares. Those have a nature of quasi debt only, because you've put in 100 rupees, you will get some coupon rate, let's say 1%, 5%, 10%, whatever is given, and you'll get back only 100 rupees. You don't have any share in the surplus. So that is more of a nature of a debt. That's why that is covered in the portfolio investment.
Yeah, but all these, the investments that are made in startups by the VCs and the PEs, and generally the instrument that is used is CCPS, compulsory convertible preference shares. Now, in case it is not mentioned anywhere, is it participating or non-participating? Then what would that be?
So I cleared that earlier also, Sumit. So in case it is not mentioned, so we have to consider those as non-participating preference shares, because preference shares per se do not have any rights in the surplus. Right. They have a preference over the equity shares as per Companies Act. So having a right in the surplus makes them participating or non-participating shares. Okay. So again, the disinvestments in India during the year. Same as I mentioned in case of FDI, in case there is any disinvestment under portfolio investments also, we need to mention that. The fourth category is the other investment, which is a residual category. So point number 1, 2, and 3 are generally on the basis of related parties. So related parties are like, defined in the accounting standard, not as per Companies Act generally, because we have to fill in the entire information on the basis of our balance sheet. So related parties mentioned there, which covers your, majorly on the basis of your investors, your shareholders, holding companies, subsidiary, associates, fellow subsidiaries. Those are covered as related parties. Other than those, there are, there are unrelated parties. These may be, for example, you have trade relations with any of the foreign entities. You simply, do sale or purchase. So trade credit, for example, you have certain liabilities towards trade credits, or you've taken loan from any party other than your related party. So that will be covered here. Currency and deposits, or if any other payable accounts, those will be covered under this category. Now, very important point here. We've talked about foreign, now related parties and unrelated parties. So I'll go to the previous slide again. So here, in the first part, we mentioned 10% or more. You mentioned equity and participating preference shares, other capital, disinvestments, etc. In the second case, investment in India under FDI scheme having less than 10% equity holdings. So this is on the basis of related parties. So you might have certain related parties which do not have any equity participation, right? For example, any fellow subsidiary, you have a fellow subsidiary in Germany, for example, with which you have certain relations, trade relations, and you have to pay, trade liabilities to that company. So you have to consider that also when you consider the number of countries. It's not only about how many countries you have share capital with, right? For you have investors, but you need to also consider if you have any other liability to a related party, that has also to be mentioned in the number of countries. First, you need to consider that and then put in that information. So there will be two sections, equity and other capital. So under other capital, then you'll have to mention, okay, towards trade credit or whatever, you have to mention that information. One more pertinent point is, for example, I gave example of your fellow subsidiary in Germany. Suppose you have some outstanding with that fellow subsidiary. You had that outstanding last year, but this year you do not have. But you have to mention numbers about previous year as well as current year. So therefore, while considering the number of countries, you have to consider any outstanding liabilities with by your company in the previous year also. So suppose you have 10 countries today, you had 8 countries last year. Out of these, 6 are common, right? So which means your company had outstanding liabilities to two countries last year, in addition to the 10 countries mentioned. So you will have to then consider 12 as a number of countries. In the current year number, you'll have to mention 0, and for the previous year, you'll have to mention 2. I hope that is clear. So this is all about foreign liabilities. Now moving to section 4, which is foreign assets. So foreign assets, just like we've talked about foreign liabilities, this is about foreign assets. Like any company has made any overseas direct investment, we have to mention in section 4. So again, this is again divided on the basis of 10% or more equity holding or 10% or less equity holdings. The major details are same, like if you have equity and participating preference shares, or if you have other capital disinvestments made during the year. The additional part in case of 10% or more equity holding is because that has become a substantial investment now. So RBI wants to know, okay, you have, what is your actual net worth in those companies. So in case of companies, in case of foreign liabilities, in section 2, details about companies, sales, purchase, number of employees, reserves, etc. is mentioned. In case of ODI, the same information is required only in case of direct investment enterprises, like the companies in which your reporting company has made investment. Details of reserve, surplus, sales, purchase, etc. of that company only. So you need to mention how many direct investor enterprises you have in which you are holding 10% or more equity holding, month and year ODI made first time by your company, and then you have to mention entity-wise information. So this information, total equity of DI and equity held by Indian reporting company, reserves and surplus and net worth of each DI, total sales and purchases, number of employees payroll, etc. on the basis of each DII. Then you have to mention equity and participating preference share capital your company is holding in that DII. Other capital similar to what we discussed in section 3. And disinvestments, again, if you have disinvested in any of your DII, you'll have to mention this during the year. Second is less than 10% equity holding. So that information about reserve surplus, etc. is not required to be mentioned, but we need to mention how many equity and participating preference share capital we are holding, and other capital in the form of non-participating preference shares, lending, borrowing, etc. we are having. And in this case, again, the country-wise consolidated information has to be mentioned. So a little bit easier than the companies in which we have 10% or more equity holding. We face challenge here also because companies, the outside countries generally have January to December as their financial year. So asking them to provide information on the basis of 31st March again is a tedious task. So therefore we need to start early. Third is again portfolio investment. This is again country-wise consolidated information which we need to mention here. We need to mention in how many countries your company is having portfolio investments in the form of equity securities. Like for example, you've invested in the shares of Apple, Google, etc. You'll have to mention here. Debt securities, if you have purchased any money market instruments, bonds, of overseas entities or any government bodies, or you are having any non-participating preference shares and debentures in any entities where you do not hold any ODI, you've taken it through portfolio investment, or you've taken it, you have non-participating preference shares or debentures, etc. in those entities. And any disinvestments made during the year under the portfolio investment scheme also you need to mention here. Other investments with foreign unrelated parties similar to section 3 if you have any trade credit. So in section 3 we talked about outstanding liabilities. Here we'll have outstanding claims because this section talks about foreign assets. If we have any claims with foreign unrelated parties in the form of trade credit, loans, currencies, deposit, other payable accounts. So suppose if I have any ODI in let's say in one of the DI with 10% or more holding, so then I would need to file FLA, right? Assuming I don't have any FDI, so do I need to fill in any information in any of the previous section is the question which generally arises, because I only have ODI in one of the entities. So FLA requirement triggers because of section 4. But it is very important to note that we will still have to mention if we have any other outstanding liabilities. We'll have to mention in point number 4 of section 3 also. While we have ODI, we might have our liabilities to the overseas parties also. Point number 4 of section 4 talks about outstanding claims. In case we have outstanding liabilities, we'll have to mention those in section 3, which generally people miss to enter. In the Excel regime, these points were clubbed in the same section, outstanding claims and liabilities. So in case we have any claims or in case we have any liabilities, those were required to be filled in the same section. However, in the online sections, these have been segregated. So there is a chance to miss those. So I therefore wanted to highlight that. Now, this is all about section 4. Coming to section 5, this is a variation report. This is basically the outcome of what all we've mentioned in section 2, 3, and 4, majorly 3 and 4. But since paid up capital comes in section 2, so this will be covered here. So this is non-editable. This will be automatically calculated on the basis of the information which we filled in the previous sections. So in case there is any variation, that will be shown in the percentage terms here. So it is very important that once we file the FLA on the basis of provisional, we also file it on the basis of audited financials. There is no timeline prescribed now, as Sneha mentioned. However, it is pertinent to mention there so that there is no variation in these cases. And even if there is a variation, it will be to the minimum. one more question arises here. I wanted to put forth. For example, there is a regrouping of accounts. So in case of regrouping, what happens is like, I have audited figures of 21-22. Now I have to file it for 22-23. So I had already filed my revised return on the basis of audited figures of 21-22. Now, when I have to file for 22-23, when I look at my balance sheet, even the numbers for 21-22 also change, because there is a regrouping which has happened during this financial year. A question arises: do I need to file revised return for 21-22 again on the basis of these numbers, right? So, as per our view, that is not required, because you need to ultimately file your FLA on the basis of audited financials. So for 21-22, you've already filed it on the basis of audited financials. Even if the numbers have changed in 22-23 on the basis of regrouping or whatever revision in financials, you don't need to, unless there is a change in audit report also, and your audited numbers of 21-22 also change. So that's all from my side, Sumit. I think I've covered all the important points in all these sections.
Right, Chandan. So thank you. This is the formal part from Chandan and Sneha on the overview of FLA, as well as sharing their experience. I'd like to share, Chandan and Sneha again for the people who joined late. Chandan is the associate partner at eMinds Legal, and Sneha is the principal associate at eMinds Legal. And eMinds Legal is a corporate law firm with 45 people, specializing in corporate secretarial, FEMA, corporate legal, accounting, tax, and payroll. Chandan, if you could showcase the book once more on your slide.
Yeah. So here is a book which Sumit talked about, the 9th edition, which we've recently come up with. So this book is updated till 5th of May, very recently to the market now, updated until last amendment. Again, as Sumit mentioned, here the section is the king. You will find everything with respect to that section, the circulars, notifications, rules, etc. Under that section only. You don't need to juggle out where to find now the respective rule or any notification. So everything is under the section, and there are very important FAQs with respect to those sections on the gray areas also. 700, 750 plus FAQs are already there in the book. So I hope this will help the readers, in analyzing.
Yeah, thank you. And Chandan, if you could, you would like to talk very quickly about your firm, and then we can proceed on Q&A.
Yeah. So, and we are a firm of 45 plus team, including secretarial, legal, accounting. So we've been advising various MNC clients like Genpact, Fujitsu, Hitachi, Honda, Proterial, Friedenberg, Admiral Group, as well as startups also like Beer Cafe, Burger King, many startups, or 300 plus clients which we are serving with. We are advising them on various topics, including convening their board meeting, shareholders meeting wherever required, fundraise, equity, as well as debt, ESOPs, etc. So we've been fortunate to have good clients with us. So there are 3 partners, Preeti, Sandeep, and I being the associate partner. Preeti and Sandeep have more than 24-25 years of experience. My profile Sumit has already read. Sumit and Kapil are currently, though they are their partners, they are majorly having the advisory role. So they have been advising us on various aspects, and having 25 plus years of experience. Looking forward to add value. So any Q&A, if any, now welcome, we can discuss on those.
Yeah. So while Chandan and Sneha, you give a 3-minute voice rest to you, you can also go through, I think more than 100 questions have come up in the Q&A and the chat box. We'll start with the Q&A box first. Chandan, you can unshare your screen, and you give your voice rest for 2-3 minutes, and you can skim through the questions while my team would like to play a short 1-minute video on Complinity, and then we start the Q&A. So, Complinity team.
Welcome to Complinity Technologies. Complinity is India's leading governance, risk and compliance software helping companies to manage their compliance, contracts, litigation, legal updates, inter-financial controls and more. Complinity is a one-stop shop for all GRC needs. With our proprietary 12 GRC modules and real-time legal updates on 2,000 plus laws and 24,000 plus compliances. All in an integrated platform that is easy to use with automated alerts and risk management capabilities. Is why compliance managers, general counsels and chief financial officers choose Complinity every time. Join the most innovative and prestigious brands that use Complinity. Automating your compliance management. Request a demo at complinity.com.
Right. So as I said, I'm currently the co-founder CEO of Complinity, which is India's leading compliance software. Now, and you know, if anyone is interested in a demo of Complinity, if you could just indicate your preference here, so that my team then can reach out to you offline. It covers all the laws and all the compliances that are applicable to your company. 2,000 plus laws and 25,000 plus compliances are covered, and more than 1,000 plus companies are using the tool. So we are amongst the top 3 compliance softwares, if I may say so, in the country, and having 13 modules, all governance, risk, and compliance. All right. So while people are filling that, Chandan and Sneha, we've got 30 minutes max, and we've got 100 plus questions. Thanks to the audience and the engagement, and I think the topic, and I think the way you all presented, it has ignited a lot of fire, and then there are a lot of questions. So I'll be doing a rapid fire, Chandan and Sneha. Anyone can answer whichever you feel comfortable, and if you feel that certain questions you do not have a ready answer, maybe we can park those questions and also address them in an appropriate way, or maybe share some way with the audience. So I'll be doing a very, very fast rapid fire. If you could also answer in the rapid fire format, just 5 seconds, 10 seconds. Let's see how many questions we can cover. Okay, so here you go. I'll go top to down in no particular sequence, in a chronological order in Q&A. So before Gaurav asked, if before 31st March 23, entity registered office shifted from one state to another, and SIN has been changed accordingly, and based on the FAQ, we need to deactivate the account and old SIN and do re-registration with the new SIN. But how will we get access of earlier filed FLAs? Any solution?
Okay, so I would like to answer this. So basically, there is no timeline provided when you have to inform the RBI about shifting your registered office. Basically, since it's a shifting of registered office, the address is being changed, you have to deactivate and you have to register as a new user. And you don't have to worry about how the information gets passed, because RBI, when you'll be providing them the information about your old SIN and the name as well as the user ID, when they'll be deactivating, they'll take that into picture, and when you'll be applying it, they will link that company. And if you'll see at the first section only, it asks whether the company name has been changed, yes or no. So when you write yes, then you'll put the new name, and then that's how RBI will link your old registration with the new registration.
Okay. Do we need to report remittances received from NRO accounts?
Okay. So NRO accounts are basically domestic accounts only. So there are 2 accounts, NRE and NRO accounts. So NRO accounts are ordinary accounts, non-resident ordinary accounts, in which the bank does not allow you to repatriate your amount outside India. So since the shares are on non-repatriable basis, the same are not to be considered while filing FLA.
In case of partly paid up AIF units, do we need to report all the drawdowns or only the first drawdown when the units were allotted in the first place?
Though RBI has not clarified this thing, but if you will see for the FLA, FDI also, we only report the amount which has been received. We do not mention about the share application money or the partly paid up shares which will be received later on. So as per our understanding, in AI also you have to mention about money which has been received and not which will be received in future.
All right. Whether branch details can be reported separately in FLA return?
So branches are also required to file FLA returns. So you can insert your details, but since branch are not required to obtain the FDI amounts, so their details will be mentioned in the ODI details because they can invest outside India. But as per the RBI regulation, branches does not receive the FDI amounts.
Okay, question to Chandan. In the reserve and surplus section, do we include P&L profit and loss amount, or we mention profit and loss in the next row after deducting it from the reserve and surplus?
So the reserve and surplus will cover the P&L also. Out of that, what is a P&L balance is to be mentioned separately, but it will cover P&L balance also, total reserves.
Understand. Is an individual required to file FLA holding foreign securities?
No. Only
It is the
companies.
responsibility of the company. Yeah.
Basically, individuals are required to file APR.
Right. The holding company is FDI. It has floated subsidiary. Hence, there is a downstream investment, but no fresh FDI received in the holding company or subsidiary company. Holding company is filing FLA return. Is that fine?
Okay, so holding companies, when they invest into another subsidiary, that is a downstream investment, which is an indirect foreign investment. In a FLA, we only have to mention about the foreign direct investment. So the holding company has to report the FLA, whereas the subsidiary, Indian company, which has not received the direct foreign investment from outside India, is not required to file the FLA returns.
Great. Mr. Funny asks, process of filing revised returns, even though in the email received from RBI says can be filed, but on the portal not able to find how to file revised returns.
So sometimes this is a technical bug which we also face. We receive a email that you can file it, but the system does not allow you. So you have to again request to the RBI, or you can mail on survey or the help desk email ID, and they will provide you the solution for this. And then you can go ahead with filing.
Tushar asks, B Private Limited received FDI in 2003. It acquired C Private Limited in Mumbai. Will C Private Limited also be liable to file FLA return?
I think I explained it before
Right.
only, that you have to mention only about the foreign direct investment. This is an indirect investment. So the second chain of the company does not require, the first B Limited will be required.
So Sneha, if I may clarify with you on this again, just for my understanding, for example, a company, a company which is a private company receives an FDI. Now, certain secondary transfers take place from a resident to a non-resident, and FCTRS, etc. is filed. In that case, the non-resident shareholding, will it also cover? Will it be covered under the FLA return? The now non-resident shareholding?
Yes. So basically, Sumit, we have to first understand, like I explained, why we have to file the FLA return. They want to know the balance of payment as on 31st March. So before 31st March, any transaction has happened. For example, if there was a resident and non-resident, and then from non-resident, it again got transferred to resident. But as on 31st March, the entire shareholding is with the residents only. Then we don't have to file FLA. But as on 31st March, if there is even a single NRI holding one share, then FLA gets applicable.
No, my question also to supplement my question. So the non-resident acquired the shares in through secondary route, through transfer of shares. So even in an unlisted private company, will this be considered as an FDI, or will it be or considered as a portfolio investment, even if it's unlisted?
Even if it's unlisted, if he's holding the share, then it's a shareholder and it has to be considered as an FDI only. And in section 3 only, we have to mention his shares in the equity share capital. If he's holding the equity share.
With FCTRS comes under the FDI scheme only. So if we have filed FCTRS and somebody acquired, it will come under the FDI.
But if the people are acquiring on the stock exchange less than 10% of a listed company, then it will be considered as a portfolio investment. Chandan, what is that?
Correct. Yes. Right.
But if it's an unlisted company, then it will the similar, because there is also in a secondary transfer, there's also secondary transfer. But in an unlisted company, you are saying it will be a foreign direct investment.
Yeah, because unlisted companies cannot have through portfolio scheme.
Right.
They can only have through FDI scheme.
Understand. Okay. So Renu asked, if shares are allotted to NRI on repatriable basis, then do we need to file FLA even if the percentage is very less, say less than 1%?
Yes, yes. Even if it is less than 1%, you have to file the FLA return.
I mean, technically, even if it's one share, you have to file
You
that.
have to file, right.
Correct.
Anil asked if the company has filed FCGPR or shares allotted, said shares were transferred to another non-resident, whether any filing. I think we just answered that, right? So if shares were transferred to non-resident, that's what my question also was, Anil. I think the FLA return will be important, mandatory. Section 2, part 3 regarding P&L account. So I think question is not clear. We'll move on. Vivek Ayyar asked, P&L provision are applicable from which financial year, as we have outstanding FLAs for previous years as well? That's a good question. The LSF, late submission fee.
So this LSF came into picture with effect from September 30, 2022. RBI came up with a circular wherein these LSF provisions were made applicable on FLAs and other compliances also, other filings. So September 30, 2022 onwards, if there are any filings, LSF will be applicable. For previous filings, I think compounding provisions shall become applicable.
Okay. No, but the question is, Chandan, that if it's a previous year filing, let's say 2019, 2018, prior to 2022, will the LSF be applicable, or will only compounding will have to be done?
So it's not very clear, but as per our understanding, only with respect to FLA filings arising or becoming due after September 30, 2022, LSF will be applicable. Earlier, in the compounding provisions, there was a requirement of making the delays compounded, but RBI never came up asking for getting these delays compounded. But again, this is RBI's discretion. One may, if someone files a delay, if doesn't get any email with respect to LSF, then the compounding provisions will become applicable.
Understand. I see a question from Manvi Gulati. I think Manvi Gulati is the eMinds alumni. Manvi, if you're the same Manvi, just raise your hands. It'll be good to see you after a long time. So Manvi asked, hi, are there any fees or penalty charged if RBI rejects the FLA form after 15 July, although the company has filed it before the due date?
So basically, in our experience, we have never seen RBI rejecting the form. It might come up with query which they can mail out to the contact person, but they do not reject the form.
Understand. It's a long question by an anonymous attendee. If in the financial year 21-22, one of the investors was non-resident, and in the FY 22-23, he became resident, do we still need to file the FLA in 22-23?
Okay, so we have to see the status of the shares. If the shares are on non-repatriable basis, then it is a domestic investment. We do not have to file FLA. But if the shares are on repatriable basis, then it's a foreign investment and we have to file the FLA return. So majorly, apart from the identity of the person, whether NR or R, we also have to see the status of the shares.
Repatriability of shares, yeah.
Okay, there's even a second part to the question, but that's seeming quite complicated, quite specific to the case, US, UK, etc. So I think my request to the anonymous attendee is that you can reach out to Chandan, Sneha, Preeti from eMinds Legal. If you need any opinion or anything, they'll be happy to help you. Next one, how to change email ID of an authorized person?
So you have to deactivate your account first, and then you have to again re-register. But even when you deactivate your account the first time, if you don't have the password will go to the old person only. So that is why I mentioned in my PPT also, please, before your management changes, change the authorized person details in FLA return. Otherwise, it will be very difficult to get hold of that previous authorized person.
Understand.
We have faced this, Sumit, in many cases. So therefore, it's important to once the management changes, it gets difficult to seek OTP from the previous individuals.
Yeah, of course. How to deactivate in case of dissolution of a company?
So you simply have to mail to the RBI on that survey email ID, and you can ask them to deactivate your account since the company has been dissolved.
Okay, Gaurav asks, is the concept of filing the Excel utility still there, or it's only Flare portal? I think it's only Flare portal, so Excel has been discontinued. FLA has
except in case of alternate investment funds, except in case of AIFs registered with SEBI, and for them also AIFs, we need to specifically raise requests to RBI, and they'll share the Excel format. The old format will not be used, so they'll share the format on the email ID registered with them.
Yeah, I think it's only a matter of time when they digitize the AIF also, like they digitize the normal companies now, right?
And
Okay.
for AIF also, you have to though register. You have to create an ID. Then only they'll send you the Excel. Otherwise, they won't.
Right. FLA has variation report. If FLA is filed on provision financial basis, is it mandatory to revise the same on the basis of audited financials?
I think Chandan already captured it at the time of variation. So Chandan, would you like to?
So while the timelines are not prescribed, but it is mentioned that on the basis of audited, you need to file a revised return.
Right. But if there is no change, I would say, Chandan, if there is no change in the provision audited, then I think it's not required. But if there is any change, I think we should do it.
Yeah, even if it is a slight change, 0.01% variation, you should file that.
Yeah. We have received only, Amit says, we have received only share capital in December 21 from our overseas parent company. There is no further FDI or ODI from inception till date. Can you confirm whether we are required to file FLA or not? Yes, of course.
Yes, you have to.
Some questions even I will answer. Oh, okay. But Chandan and Sneha, you can surely correct me if I'm wrong. So Neha asks, hello ma'am, we have one, so it's an address to Sneha. She says, hello ma'am, we have one query with reference to repatriable shares. If the company shareholders are NRI or holding shares in repatriable form, does that company require to file FLA return?
Yes, since shares are on repatriable basis, the same is considered as foreign direct investment only. So your company is required to file FLA return.
Okay. If a private company receives a fund from their NRI shareholder from Indian bank to company's account, that's a query number 2. I think the query is not very clear. Okay, we'll skip that. How do we have to mention the authorized preference share capital? I think it's very straightforward, isn't it? Authorized is mentioned in the form itself.
Authorized is not required to be mentioned, only paid up is required to be mentioned.
Okay, so authorized is not required to be mentioned only. Okay. Where do we fill compulsory convertible debentures, Chandan?
So if these are participating, then we have to fill in the capital part. If these are non-participating, if it is with the related parties, it will come under the other capital. If it is with unrelated parties, it will be coming under the portfolio investment, under debt securities.
Madhukar asks, if we have not revised the return, what are the consequences?
So basically, though RBI advised to file the revised return, but they have not provided any penal provision in case the company does not file the revised return. So since LSF has now been introduced, this is still a question that whether RBI will penalize the company on the basis of changes not made to the RBI or not.
Right. Okay, now Bharti asks, they are a recently incorporated company in 2022 and they have not even yet filed the FCGPR, but they do have revenue and, of course, there are shareholders, foreign shareholders. Are they required to file FLA?
So if their share application money has been converted and the shares are allotted as on 31st March, even though you have not filed the FCGPR, you have to file FLA.
I think we've already answered. Individual holding foreign securities is not required to file FLA. Is it mandatory to file the revised return with actual value since we never knew about this option? Yes, I think if they, as we said, if there is a change, do file a revised return. What about the exemption of listed companies from filing?
So if they have investment only under portfolio investment scheme, they are not required to file. But if they have FDI also, they are required to file. And
is written what does count as an FDI? So whatever is a direct primary investment in the company from abroad, it's an FDI, right?
Under FDI scheme, you filed FCGPR, etc., or FCTRS, then you come under FDI.
Right. So explain the process. Dilip says to be followed in case of change in address and change in entity, like conversion from public to private. What is to be done?
So basically, it's the same. You first have to apply for deactivation, and then you have to again apply on the FLAIR portal by submitting your authority and verification letter along with the PAN card and filling the requisite details. And then you'll receive the user ID and the password on your email ID, which is then required to be reset.
Okay, Aarti asks whether investment of less than 10% in listed entity is considered as FPI as the percentage of shareholding is less than 10%, and FLA return is not required to be filed by the company, or FLA return is required to be filed irrespective of the percentage. Chandan.
So as I mentioned earlier, if that less than 10% is under portfolio scheme, then it is not required to be filed. But if it is under FDI scheme, even listed companies can have investment under FDI also. If it is under FDI scheme, then the company is required to file.
I think, Chandan, it will be nice for you to elaborate again in case of listed companies, what will be an FDI and what will be an FPI. If you could articulate, I think this is the question coming from many people.
See, there are two scenarios. One is, the foreign investors or the non-resident investors can invest into India either through FDI scheme, wherein they directly invest into the company and the company allotted shares to them directly under FDI. FCDPR is filed, and the valuation norms and all these conditions are fulfilled. So then it will be considered as FDI. If it is like a secondary market purchase, secondary market transaction, you have a demat account and you buy shares of an Indian entity, that will be considered under portfolio scheme. So if it is only under portfolio arrangement, then the company is not required to file unless if the company has ODI or does not have that. That's a separate thing. But with respect to FDI and portfolio, if it is only a foreign institutional investor, for example, have bought shares in your company under portfolio scheme and there is no FDI as such, they may have it in the FDI part also. For example, in case of startups getting listed, they already have a investment through private placement, preferential allotment. So they have FDI in the company, right? And they or any other institutional investors might also acquire in the secondary market, right? So if they already have it when they were unlisted under FDI, or even if the companies are listed but companies want to do it through private placement under FDI, then it becomes applicable. If it is only secondary market transaction under portfolio route through demat accounts, etc., QIBs, etc., then it is not required.
Understand. Kamal says, what is the meaning of participating preference share? This I think I'll only answer. Chandan has already answered that if the preference shares have share in the surplus of the company, then they are participating preference shares. If they are only entitled to the coupon rate dividend what they have and no other share either as a dividend over and above and neither at liquidation in the surplus of the company, they are non-participating preference shares. And if it's not mentioned in the term, they are non-participating. Okay, Sneha, what is the procedure for changing the registered email ID on players?
Of authorized person?
Yes.
So basically, you have to deactivate an account only because RBI has linked the entity with the authorized person only. So email ID cannot be changed like that. You have to first deactivate and then register your entity with the new ID.
Okay, Sandeep asked, if majority of shares of a company are held by a foreign national individual, what should be selected here? We have been advised to use subsidiary of a foreign entity, but an individual holding shares doesn't make the company a subsidiary.
Right.
Correct. So if it is not a subsidiary per se, it cannot be considered as subsidiary. It has to be considered as others, or unless, if it is associate entities, so associate entities also define like 20% to 50% shareholding is there, then associate has to be mentioned. Otherwise, it will come under others part.
Yeah, Sandeep, I think you have not been advised properly. And for better advice, please contact Chandan and Sneha and Pahwa. Okay, Rahul Kesri, we haven't received any FDI during the year, but our company is a subsidiary of a foreign company. Whether we are required to file a FLA return on the current year. Yeah, if any foreign direct investment is outstanding, even if nothing has been received last year, FLA will have to be filed. In case of FCTRS, seller of the shares needs to file the FLA. No, only the company needs to file FLA, not the buyer. Yes. Whether it is required to file FLA pertaining to audited or unaudited, I think initially unaudited. If the audited are not ready by 15 July and if there is any variation in the audited, then file on audited also. Okay, let me now, in the interest of time, it's 1:30, by the way. We will finish in the next 10-15 minutes. Although it's Q&A going on, there's a barrage of questions, still many more questions unanswered. It's our attempt to answer as many, and we stay committed. So I would say the people who have posted the questions for sure should stay back. We will probably take 10 to 15 more minutes to try to attempt to answer all the questions. People who have not posted the questions, even all the more reason for you to stay back, because you learn from other people's questions and the answers, and I hope you're enjoying. So in this interest, okay, I'll continue. Gaurav asked query on 12. If the technical foreign collaboration is with, say, Germany, will disclosure be required for a new business, say, in Italy? It's a very googly question, in my opinion. I didn't understand the question properly.
Didn't understand. Yeah.
Okay, so let's skip it. Gaurav, maybe you can connect with us offline, and we can look at the facts of the case in more detail. Anonymous, if my company got merged into another company last year, whether I need to file FLA for 22-23? This is a question for which company has been merged. Yeah.
So not required to file. In that case, the company in which your company gets merged is required to file, and therein it needs to just select, whether, see, the question there is a little confusing. It says whether your company is merged or amalgamated. However, when we say yes, it asks for the name of companies which got merged in your company, number of companies, and the names of companies. So your company gets merged into another company, you don't need to file, but it is advisable that you write an email to FLA team, survey FLA, telling them that your company has got merged and there is no requirement to file now, for record's sake.
We have made ODI in an overseas company and shares got allotted during the year. Do we need to file FLA? Of course, yes, right?
Yes.
Yeah.
Yes.
Do we need to mention redeemable preference shares under class of shares?
Yes, all the preference shares are required to be mentioned.
Also.
And you have to divide it whether it is participating or non-participating.
Okay, in case company's financial year is December, Jan to December, in such case, we have to file a return for December and also have to audit the March too.
We have to insert.
So we have to file.
Yes, Chandan, please.
Only on the basis, or as of 31st March, we have to file. Even if your accounts are audited as of December, the requirement is to file as of 31st March only. We need to have provisional financials on internal assessment basis.
Okay. Manoj asks, our amount was due in the previous financial year 22-23, but was received in this financial year 23-24. Do we need to file FLA return?
No, since there was no amount outstanding in the form of FDI or ODI as on 31st March, you do not need to file. You have to file it next year.
Yeah, but I'm just assuming that if the amounts were received as share application and hopefully the time of allotment did not cross, right? Otherwise, one has to go for compounding.
Right.
Yeah. Oh, very good question. Can we get an e-book of CLR? So currently, corporate law referencer is available in print only, 2 volumes. We will soon thinking of coming up with an e-book also, but for the time being, go for the library edition. The look and feel and the smell of the book, e-books cannot match that. So I think this can grace your library also. This is the 9th edition, and it's the commitment by eMinds Legal to publish yearly editions every April or May. So I think, and once you read this book, it's my guarantee that you cannot ever read any other book once you start reading this book. That's my guarantee. You can hold me to account, on that. Okay.
Right.
Do we update the downstream investments from Indian company, not from the overseas entity?
I did not get the question. So can you please repeat?
Means I got the question although. So if there is an FDI company in India and they make a downstream investment, does the downstream investment company also needs to file an FLA?
No, they do not have to, because we are only intimating our way about the direct investment over here. So the first company which has received the direct FDI has to report the FLA, not the company which has received the downstream investment.
Okay. Sangeeta says how to file the revised return with audited figures on the FLAIR portal. There was no drop down being shown for revised return.
No, so on the FLAIR portal on the left hand side only, it gives you an option to request the RBI for filing the revised return. Once you select it and the financial year, then the portal will allow you to file the revised return.
Okay, one very honest and very good question by Neeta. What to do if there is a mistake in previous year's FLA section 2?
We need to file revised return in that case first.
So
then
revised return be filed even for previous years, Chandan?
Yes, it can be.
And it
No,
can
even
be
if
revised once, or can it be revised multiple times?
multiple times. There is no restriction as of now, but it is always advisable not to revise, as many times.
Right.
You be sure of your figures and then you file the return.
Okay. Mudita says, let's say we have ODI in two companies, one entity in US based and its financials are audited on the basis of calendar year. Shall we insert the audited period December 31 or shall we ask them to do till March? In March is the answer. It is
Yes.
Yes. What about income tax expense, whether it will be covered under domestic purchases? Income tax.
So all the expenses which are covered in your P&L account, including the income tax expenses, are to be covered in your, basically in the purchases, you have to enter about the expenses. So this is basically profit and loss before amounts only. So there you have to
But
get
income tax is not an expense. I mean,
right.
On the expenses, on the profit, you pay income tax. So it is not a purchase in my opinion.
Basically, in section 2, you already mentioned profit before tax and profit after tax. So your income tax will get reflected over there.
Yeah,
absolutely.
The number of employees should include the no PAN company, including. Question not clear. Okay, we'll move ahead.
To clarify on that also, number of employee means employee on the payroll of the company.
Sorry, what's the question, Chandan?
So I was saying, just to clarify on that, number of employees means the employees on the payroll of the company. We need to mention that number.
Okay. Foreign company or FOCC company also have to file FLA?
No, they do not have to. FOCC companies are basically which has received the foreign investment in the basis of downstream investment.
Understand. Nikita asked YouTube channel where this webinar will be uploaded. So my team, if you could again mail in the chat box all the links. Please subscribe to YouTube. You can also go to Spotify, subscribe to the podcast. The podcast name is Compliance Talks with Sumit. And also subscribe to all our channels. We post different content on different channels, sometimes similar, sometimes different. It will be good to stay connected with you. We are holding regular monthly webinars as well. Do reach out to us. Do let us know which topics, etc. And thanks for coming in great attendance. Okay, we're continuing with the questions as our commitment. In case if the Ashiva asks, in case if the company is having continued and discontinued operations, the sales figure should be continuing or discontinuing operations.
Basically, it is to be on the basis of your 31st March data.
Yeah,
so
whatever
amount is coming, you have to mention over there.
Yeah. In case of a listed company, what will be the best approach to analyze shareholding data given by RTA to ensure correct categorization in the FLA return? What will be the best approach to analyze shareholding data? I think you have to no option but to just see the segmentation, just see
shareholding pattern. Yeah, you have to consider the shareholding pattern. You also filed that data with the stock exchanges. So there are also categories you need to see those categories in the FLA part also and accordingly mention it.
Okay, Gaurav asked if one shareholder who was tracked in the last FLA return in 10% or more category, and now as on 31st March 23, he does not have any shares, all the holdings are been sold, then how such will be showed in the return?
So basically in less than 10%, you can mention for the previous year his percentage, and for the current year, you can mention 0.
Right. But if suppose there is no outstanding foreign investment, then I think they don't need to file the return now.
They don't need to file FLA at all.
Yeah. Assuming that was only foreign investment, I mean, just making up the fact, then they don't need to file the return. Okay. Is the company supposed to file FLA if there is no FDI last year but received FDI many years ago? Yes, if the FDI is outstanding, you need to file. In case of listed company, how to segregate between FDI and portfolio, that I think Chandan has very well articulated. Jital says, can we say that direct allotments are FDI and secondary market purchases are portfolio? Straight.
Yes.
But not in unlisted companies, because in unlisted companies, everything is for indirect investment, right?
Yeah, generally, in secondary, in case of unlisted companies, we talk about transfers, FCTRS, etc. generally secondary market word is not used. That is used in case of listed companies, stock exchange, etc. So I responded accordingly.
Muskan says, will CCPS be treated at par with participating preference shares? So no, Muskan, if it is mentioned participating, it is participating. If nothing is mentioned, then these are deemed to be non-participating preference shares. Gaurav says, being a first year of incorporation, an entity received FDI and allotment done before 31st March 23, but operation not started. Do we have to file nil return? No, it's not nil return. If you receive, if you have received an FDI, even if your business operations haven't started, those numbers have to be put in, right? Sneha?
Yeah, the sales and purchase numbers could be zero.
Yeah.
Right? Purchases is generally not zero because you anyways incur certain expenses that will be covered, but your sales number will be zero. Your in case of profit and loss, you'll mention your loss number there, but you need to fill in FLA with the foreign liabilities FDA part section 3.
Right. Whether subsidiaries which have been disinvested or liquidated on or before 31st March should be considered in FLA filing?
So disinvestments during the year we need to file, yes. But again, FLA triggers only if there is an outstanding balance as of 31st March. Otherwise, you have to anyways, if it is like subsidiary outside India, you have to intimate to RBI with respect to disinvestment separately under ODI regulations. If there is no outstanding balance as of 31st March, we don't need to file FLA. A simple intimation to the FLA email is required.
Right. Now, Dheeraj asks, is there any due date for a revised FLA after the audited financials?
No, presently the RBI has not provided any date. Previously, it was end of September.
Right. Lokesh asks, is the capex purchase or not? Capex is also, capital expenditure is also considered in purchases, yes or no, Chandan?
Yes. I covered that in my slide.
Right. Okay. Then kindly explain the exemption available for issuance of securities on non-repatriable basis, and also what is non-repatriable basis rules. I think that's a very rules, etc. is quite a long question, but I think non-repatriable basis we don't need to file FLAs, right? If there is only non-repatriable basis.
Because the main concept is, yes. So basically the main concept is you have to tell the figures to RBI on the basis of which the amount will go from India or will come in the basis of outstanding liabilities and assets. In case of non-repatriable basis, the person cannot take back the money outside for those shares. It is a domestic investment, and that is why FLA does not get triggered.
Yeah. We have purchased shares of the foreign company from a third party. We are holding the shares in physical form as on date. Do we need to file FLA, Anil Agarwal? Yes, you need to file.
If it is under ODI, then yes, we need to file FLA.
Yeah. Okay. I'm just skimming through a few questions. Is step down subsidiary required to file FLA? No, that's already been answered. Why do we need FCGPR and FCTRS? Only FLA is sufficient. Subareka, all forms are important. All forms have been prescribed. So FCGPR, TRS, FLA. If you don't file anything, all the late fees and penalties and everything will follow. So compliance is important. If you don't believe, try non-compliance. And that's what Complinity is all about. Driving compliance, not only in company law, corporate laws, FEMA, but even labor laws, environmental laws, industry-specific laws, hundreds of other laws which are there. That's what Complinity's job is. And we hold these webinars. One, of course, to bring important topics and important speakers and good audiences together to answer their queries. Also to drive home the point that this is all about compliance. I love to call myself as a compliance evangelist. So compliance is why we professionals exist. And I think let's advise our managements and our clients towards compliance to the T. And that's what, and raise the entire compliance standards of our companies and then the country. Okay. I'm just skimming that any question which has not yet been answered, because questions are repeating also in different words. I think questions have started repeating now. We may miss a few here and there because of barrage of questions. Okay, I'm unable to copy the links which you can have shared in the chat box. How can I do that? Okay, Kavita, I don't know why you're not able to copy the links. But anyways, my team, we can send these links on email also to all the webinar attendees. So you will have the links, or otherwise, go to any social media, be it YouTube or LinkedIn or Instagram or Facebook, and search for Complinity. You have the spelling COMPLINITY, Complinity. Search for Complinity on any social media. Even if you don't have the links, I think if our marketing is right, you should be able to find us somehow. Okay, or go to our website www.complinity.com and you will get all these links over there as well. So in this connected world, I don't think it will be difficult for anyone to find anyone. Yes, you're welcome, Kavita. Okay, I think let's call it a day. There are a few questions which are repeating. Or shall I take one last question? Anything that catches my attention now? Ashiba says, please share the link for availing, the book also. Yes, my team has already shared the link. So okay, so just to re-articulate on the book, please have a look at the book. It's my commitment and guarantee that the entire secretarial team at eMinds Legal eMinds Legal has been practicing company law for the last 13 years. They have put in their heart and soul and all the client queries and everything within this book, on which the entire practice of 300 plus clients is running. All this knowledge is available at just the cost of a book, and go for it. Give us feedback on the book, and look forward to adding this book to your library, not just for one edition, for all the editions. I flaunt all the 9 editions of this book. I'm sure someone in this audience would be there from 5th edition, 4th edition. There are many hardcore loyal readers. So go for the book and give us feedback, and we'll keep coming with more and more books, more and more webinars, more and more topics, more and more speakers. I think with this, I hope the webinar was fruitful, was successful. I think it answered questions. Thank you, Chandan. Thank you, Sneha, for your valuable time, for all the prep work and all the good work and the rapid fire questions. Gaurav Naik says Q&A was good. Thank you, Gaurav. Anybody has any feedback on the webinar, please put it in the chat box. It will only encourage the speakers and the organizers. I was saying thank you, Chandan and Sneha, and also in absentia, Swati is behind the scenes. Swati Ajmera, who has worked very, very relentlessly in preparing the presentation and the research work. Thank you to Preeti Pahwa, partner eMinds Legal, for all your support. And thank you, everyone. Thank you, my team from Complinity, for organizing this, putting this together. And thank you, audience, for a wonderful patient attendance just before the lunch and turning up in huge numbers. Thank you very much. Thank you, everyone. This is Sumit Pahwa.
Thank you, Sumit. I'll take a moment to thank you for organizing this. I hope we are able to clear as many doubts as possible. If any of the person has doubts, they can contact us, and we'll be happy to help wherever possible. And I would also like to thank a few of my more team members, Kashika, Rahul, Pulkit, who have been really helpful, in all this. So happy to serve wherever we can to the larger audience.
Understand. If you have still got any queries, you can mail to chandan@emindslegal.com or sneha.adlakha@emindslegal.com, right? Chandan, CHANDAN, chandan@emindslegal.com or sneha.adlakha, sneha.adlakha@emindslegal.com, and they'll be happy to answer your queries one-on-one. Let me just put in the email IDs here. chandan@emindslegal.com, sneha.adlakha@emindslegal.com. Okay, here are the 2 email IDs that you can catch hold of. Mail your queries and my team will be happy to answer. All right, on that note, thank you very much, everyone. Bye-bye.
Thank you, everyone.
Welcome to Complinity Technologies. Complinity is India's leading governance, risk and compliance software helping companies to manage their compliance, contracts, litigation, legal updates, inter-financial controls and more. Complinity is a one-stop shop for all GRC needs. With our proprietary 12 GRC modules and real-time legal updates on 2,000+ laws and 24,000+ compliances, all in an integrated platform that is easy to use with automated alerts and risk management capabilities, is why compliance managers, general counsels and chief financial officers choose Complinity every time. Join the most innovative and prestigious brands that use Complinity. Automating your compliance management. Request a demo at complinity.com.